Hey, what's up everybody? This is Scott here again with a new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And as usual, given that today is Friday, what I have here is my next episode of my live option trading series where I show you all the trades and all the adjustments I made this past week. And once again here, this was another very crazy week with the tensions between Russia and the Ukraine continuing to escalate. And now with the full-on military invasion underway, the markets really went crazy this week. So therefore, throughout this video, you're going to see a lot of technical analysis on both the S&P 500 and the NASDAQ and how I use that information or that analysis to make quite a few trades this week as well. And in particular, those new trades were in AMD, Facebook, Roku, and Alibaba. And actually both the AMD and Facebook trades came off for a full profit this week as well, alongside my new core position, which I put on, I believe, last week. That one also came off for a profit as well. So you're going to see all that and a whole lot more in this video, so make sure to stick around for the whole thing. Now, as always, before we dive in here, in case you are brand new to the channel, I do also want to let you know that you can find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1 month free trial. All right, and so with that being said, at this point, I'm going to stop here and play a few clips that I recorded throughout the week that again will show you all those new trades I made and the technical analysis I was doing along the way to allow me to navigate through this very volatile week. So let's get started. Alrighty, today is Tuesday, February 22nd. This is the first day of the trading week because yesterday was a holiday and so the market was closed. Now today, the first thing I want to do this morning is place a brand new trade here in Roku. So I have traded this stock many times in the past because usually it does have very high implied volatility and both the stock and the options are very, very liquid, which basically just means there is a lot of trading activity around Roku. And so that's why you can get filled on your orders with any Roku trade pretty darn easily and for a very good price. Now, I was also considering placing an earnings trade on the stock, which they reported their earnings a few days ago, but I decided not to do that because it seems for this current earnings season, there have been a lot of really outsized moves, right? So for example, in the case of Roku here, if we come to the charts and I'll zoom in a bit, as you can see right there was their earnings announcement, and this stock dropped by about 27 to 30% once those earnings figures came out. So that's obviously a huge move. And had I placed an earnings trade on this stock, I likely would have lost a decent amount of money. Now, also after an earnings announcement, you typically do see a very large crush in the implied volatility. But if the move is large enough, you oftentimes don't see that. So down here, if we take a look at the implied volatility for Roku, as you can see right there, the IV peaked right before the earnings announcement at around 113%. And once those earnings figures came out, we did see a little bit of a crush in the implied volatility down to about 90% or so. But obviously, as you can see here, there is still a lot more room for the implied volatility to crush even more. So right now, we're still seeing an IV rank of 70%. That's very good. And also an IV percentile of 93%. Very, very good. So again, in case you're not aware, these two metrics simply show you, objectively speaking, with a simple number, how high or low the current IV is relative to the past 1 year. And like I was showing you over here, right now the IV for Roku is still on the very, very high end compared to the past 1 year. So therefore, the options on Roku currently are still going to be very, very inflated in terms of their pricing. And that's why I'm going to step in here and sell those options. Now, in terms of the exact kind of trade here, if we come to the charts once more, for this trade, I'm going to sell a very directionally neutral strategy, basically a short strangle, because I do think there is significant overhead resistance right around this price point, somewhere around 100 and call it $45 per share or so. And in fact, we'll come up here to my drawing tools real quick and we'll go to this one right there and I'll draw in that resistance level. So right around there, and I'll just drag it over. So there we go, right around 145, $46 per share, somewhere around that point. I would say there is going to be significant overhead resistance. Basically, I'm willing to bet that Roku is going to have a hard time getting above this price point if this little rally here can't continue up to that point. So therefore, for my strangle here, I'm going to sell my call strike above that point. And then also, if we change the time frame on this chart, let's take a look at the 5-year 1-day chart. And we'll zoom in right around in this area. So in particular, and let me go ahead and get rid of this alert real quick. There we go. So in particular, you can see back in the past, back in both 2020 And also back in 2019, I do think there is a significant support level right around $100 per share or so. I know it's a bit hard to see on this chart here, but if you follow this line all the way back to today, you can see that those 2 points, those 2 areas where Roku came down and then bounced off that point in a huge way, especially with the last time, right? This was basically the beginning of this huge bull run for Roku. Both those points occurred right around $100 per share. And now once more, if I zoom in a lot more here, as you can see after this pretty bad earnings announcement, Roku fell down all the way to just above $100 per share once again, and now it seems like it's bouncing off it. So point being, my bet here is that for the short term at least, for the next few weeks, my bet is that Roku is going to stay below $145 per share or so, and above perhaps $100 per share. So therefore, with that in mind, let's now come over to the trade tab and take a look at the option chain on Roku. For this position, I'm going to go in the March expiration cycle with 24 days left to go. We'll unfold that tab. And so now looking at the call side first, let's scroll down a little bit. So like I showed you with that resistance level right around $145 per share, I do want to pick my call strike here to be a little bit above that point, just to give myself a little bit of extra cushion. So therefore, for this trade, I'm going to sell the 150 strike call option, $5 above 145. And then for the put side here, again, like I also showed you, I do think there is some support right around $100 per share. So going a bit below that point, I'm going to sell the 98 strike put option. And so with this put having an 18 delta and the call option having a delta of 16, this is going to be a very directionally neutral strategy, right? Because currently Roku is basically right in between that range, above 100 and below 150, kind of right in the middle at currently $120 per share. So therefore, I definitely don't want to lean too bullish or too bearish right now. So that's why, again, I'm going to place a totally directionally neutral position. So now with that being said, I'll come down here and right click on the call option and go to sell and then strangle. And here we go. This is the order. Just going to sell one contract of the 150 strike call option and at the same time sell one contract of the 98 strike put option. And the total credit here is about $500. That's not too bad. So I'll lock in that price of around perhaps $505. Go to confirm and send. Buying power effect is about $1,200. That's fine. So we'll go to send. And there we go. Just got filled at 503. Very nice. Awesome. And so the last step here is to create my automatic GTC closing order. So now I'll right click on the call option and go to buy and strangle once again. And here we go. This is going to be my closing order to buy back both of these contracts. And I'll try and do so for half price. So half of 503 is about 250, just rounding down a little bit there. Then lastly, we'll make it a GTC order so it's always in place, and then confirm and send. All done with Roku here. And then also one more thing to mention here. Last Friday, I did place a brand new trade kind of towards the end of the day. So unfortunately, I was not able to record it and include it in that previous live trading video. So now I'll show you it here. So for that trade, let's come to the charts real quick here, and we'll go to AMD. I think most people have heard of this company. And also let's go ahead and change the time frame on this chart back to a 1 year, 1 day. And then we'll zoom in a little bit. So on Friday, which was this day right here with this candle, I did note that AMD came down and pierced through this 200 period moving average, which oftentimes can act as support. And at the same time that was happening, if we now come over to the QQQ chart, this is an ETF that tracks the NASDAQ. At the same time AMD hit that 200 period moving average, the NASDAQ here, which is mostly tech stocks, hit a major support level as well. So this line here in white, let me go ahead and draw it over a bit more. There we go. So again, with this candle right there, this was last Friday. As you can see, it just came down, touched that support level, and then backed off it a little bit. So basically, I took a directional shot in thinking that if the NASDAQ came down and touched that support level, and then if I could see that support level holding a bit with the NASDAQ bouncing off it, then at that point, I would feel comfortable placing a bullish trade on some sort of tech stock. And so naturally, with AMD being a very liquid stock and having pretty high implied volatility, that's why now coming to the trade tab, and we'll go to the AMD option chain for this, of course. That's why when all that was happening, I stepped in and sold the 105 strike put option. And at the time, I sold this contract for, I believe, about $440 in credit. So thus far, this trade is looking pretty good. I'm getting pretty close to my profit target. And that support level, which you saw on the NASDAQ, is continuing to hold for the present moment. Now, the very scary thing, however, is if we come back to the charts one last time and go back to QQQ, the scary thing, as I've mentioned in previous videos, is if the market does actually commit and break down below the support level, we could see another huge round of selling. Basically something similar to what we saw here back in January. And the very scary thing actually was last night, once the futures market opened to begin the trading week, the futures contracts for the S&Ps, the NASDAQ, the Russell, every index plummeted by a huge amount. And that was off the news of more escalating tensions between Russia and the Ukraine. So actually, just to give you a visual demonstration of that, let's go to /NQ. These are the NASDAQ futures contracts. And then we'll come over here and zoom in. So this chart here is basically the exact same as QQQ, except it does include a lot more data. That's because futures contracts trade 23 hours a day, not just between 9:30 a.m. and 4 p.m. during the regular trading session. So if you recall from the QQQ chart, that last major support level was right around here. And like I explained, the support level is definitely holding for the time being, with stocks being up on the day so far. But again, look what happened overnight. The NASDAQ futures actually came down much, much lower. And they actually made new lows compared to the recent lows we saw back in January. And so when I saw this happening last night, I was pretty freaked out because I thought that this would mean all hell is going to break loose once again, and we're going to see perhaps another huge, massive wave of selling. But so far, it seems those fears around Russia and the Ukraine have cooled off in a pretty short period of time here. So therefore, for the current moment at least, I don't think we're going to see any major selling, at least yet. But once again, coming back to QQQ, if this last major support level does actually break, which technically it already has overnight, but if we especially see a pretty big break of this line during the day, when the vast majority of trading activity is actually going on, then at that point, I would not be surprised if we saw another big leg down lower. So keep a careful eye on that support level, and we'll see what happens. All right, today is Thursday, February 24th, and wow, we saw a very, very crazy market open because in particular last night, some news broke out that Vladimir Putin has decided to order an actual military invasion of the Ukraine. And so in consequence of that, once that news broke out, we saw an immediate reaction in the futures market where the NASDAQ, the S&P 500, the Dow Jones, Russell 2000, everything completely tanked by a huge, huge amount. And this all happened right on the heels of the market finishing right on those support levels that I showed you in the previous clip. So for example, if we come to the charts real quick, this is QQQ. Let's go ahead and zoom in. So like I was saying, if this support level did break, and in fact, in the case of the NASDAQ here, it definitely did break intraday yesterday, then my assumption was that we're going to see a much larger continuation down lower after that point. And basically all the market needed was one excuse to make that happen. And in this case, that excuse was the invasion of the Ukraine. Now, the very peculiar thing here is that once the market opened, and so far we opened right on the lows of the day, the market has continued to rally all the way up back to almost unchanged. The NASDAQ right now is only down by about 0.5%, and for a brief moment, it was actually up on the day. Pretty crazy. But now at this point, this former support level right there has now flipped to resistance. So therefore, if we do see the NASDAQ manage to get all the way back up to this price, around $334 per share or so, I do think it's going to have a very hard time getting above that point. And perhaps if we do get to that price, that might be the turning point in the market to resume back down to even lower prices. Right? Perhaps what we're seeing right now is simply a short-term bounce because, again, the market is a little bit oversold at the moment and potentially due for a very small and short-term correction. But now we have tons and tons and tons of overhead resistance that the market's going to have to fight through. And that path of trying to go back higher is certainly going to be a whole heck of a lot more difficult than simply resuming and going back down lower. Right at this point, if we zoom back out here a little bit, the next major support level as I see it would be somewhere probably around there, right around 316 or $15 per share. And we almost exactly touched that this morning on the market open. So perhaps that's also why we might be seeing a short-term bounce here. But basically the point I'm making here is the path of least resistance, at least the way I see it, is simply to go even lower versus trying to completely turn around and fight back all the way through this to all-time highs again. And then also here, let's take a look at SPY. There's one thing I want to show you on this chart. So again, SPY is an ETF that tracks the S&P 500. And pretty similar price action as with the NASDAQ, but take a look once more at this major support level. And as you can see here, SPY has been trying to recover most of today so far. And it basically just got up to and almost barely touched that support level, which is now resistance, and now it's backing off again. So the way I see it here, that's confirming this price point, this level, as resistance. And so far from top to bottom, the S&P 500 is down by about 15%, which is only 5% away now from being a technical bear market. So right now we are just in a technical correction, but again, 5% more to the downside, and we will officially be in a new bear market. Now also, with all this craziness that's been happening today, I have had to make an adjustment in my Spotify position, and also I put on a new position in Facebook and then took off a trade that I had on in NUE. So first up here, let's take a look at my Spotify trade. Come to the charts, SPOT. So of course, with most stocks today, this one opened down by a pretty huge amount. Spotify basically opened on the lows at $135 per share or so. Now my initial position on the stock, let's go to the trade tab now, and I'm in the March expiration cycle here. My initial position was being short the 190 strike call option and also the 140 strike put option. So at the time, this was a very delta neutral strangle. I was simply trying to play for an implied volatility contraction and for Spotify to remain in this pretty wide range here. But unfortunately, as I showed you on the charts there, Spotify opened this morning at around $135 per share. And so with my particular strategy, if I do have a short put option that does get breached, if the stock falls below the strike price, then at that point, I will short 100 shares of the stock to cover the put contract. And in that way, if the stock continues going lower and lower and lower until the expiration date, then it does not matter. Right? Because the short stock will cover my obligations when I get assigned on the put option, and I'll still get to walk away from the whole trade and keep the premium that I collected when I first sold the strangle to begin with. And then conversely, if the stock does rebound and recover back above my put strike at some point before the expiration date, then I'll buy the shares back and remove the hedge. And in most cases, I would take a small loss in the process and simply carry on. But unfortunately, every now and then, like in this case here, you will see a pretty big gap move overnight, and you might have to short or buy the stock at a pretty bad price. So in this case here, I was able to short 100 shares of Spotify, and the fill price was $136.50. So that's exactly $3.50 below my short put strike. And therefore, in either case, if I do get assigned on the put option, if Spotify never recovers by the expiration date, or in this case this morning, if Spotify does recover back above my put strike, right? Currently Spotify is at 143 now. Then in either case, I'm going to lose $350. Now, the good news is my starting credit on this trade was $540. So even losing that $350 and doing nothing to compensate for that, I would still have the potential to walk away by the expiration date with some profit. But that being said, I still wanted to make an adjustment on this trade here to take in additional credit and therefore compensate for losing that money this morning. So that's why here on the call side, I rolled down my short call option. Basically, I bought back my original call at the 190 strike and then sold a new call option right here with the strike of $155. And in doing so, I took in an additional credit that amounted to $330. So therefore, and I'll go ahead and pull up the calculator real quick to make this very easy to see. So if my starting credit on this trade was $540, and then if this morning I lost about $350 from, again, having to short and buy back the shares for a loss, but then through my adjustment, if I took in an additional $330 of premium, that brings my total net credit on the trade back up to $520. And so there you go. With that adjustment being made, I have basically replenished my credit back to almost where it was at the very beginning. Now I do also have a shorter or a more narrow short strangle on right now. That's the main downside with this adjustment. So I'll have to be a bit more careful about watching where Spotify moves over the next couple weeks here. If it breaks back down below 140, I'll have to short the stock once again. Or if it recovers pretty significantly and rises above 155, then at that point, I'll have to buy 100 shares of the stock to cover my short call option. But again, like I showed you with Spotify right now being at around $144 per share, it's currently in between my short call and short put strikes, so there's nothing more I need to do on this trade. So that's Spotify. And then now let's come back to the charts real quick and we'll go to NUE. This is Nucor Corporation. They're involved in the production of steel and other steel products. And this trade here I've had on for about 2 weeks or so. And just as a refresher, in particular, I noted this resistance level right there in white at around 124, 125 bucks per share or so. And so once Nucor got back up to that point, that's when I stepped in and sold a naked call option with a 125 strike. And then as you can see through here, Nucor was definitely trying very, very hard to get above that resistance level. There was 1, 2, 3, 4, 5 attempts to get above that price. But ultimately, it failed every single time. And then with the market kind of crumbling today and over the course of this week, Nucor has come all the way back down to and opened around 113 bucks per share. And so it was at that point where I bought back and closed that naked call option. So this was a pretty small trade here, and we'll go ahead and pull up the calculator again so I can show you the final outcome of this trade. So initially, I sold the 125 strike call option in the March cycle for a credit of $384. And then this morning, with the stock dropping all the way down to 113, like I showed you, I was able to buy back the contract for a debit of only 190. So we subtract 190, and therefore the final outcome of this trade is a profit of just shy of 200 bucks. Very nice. So that's Nucor. And then finally, one more thing to show you. I put on a new position this morning as well in Facebook. So this stock, if you were not aware, on their previous earnings announcement, which was right there, about 2 weeks ago or so, this stock had a huge, massive gap down move by about, I think, 30% or so, and has continued to slide and slide and slide almost every single day thereafter. Now, personally, I was kind of happy to see this. I thought Facebook was one of the most grossly overvalued companies out there in the market, so seeing this stock come down by 40 or 50% was definitely something I was not sad to see. Now, that being said, I also tend to be a contrarian-based trader. So when stocks get killed like this, at some point, assuming my trading criteria is met, I do like to get bullish and play for a short-term bounce. And though I was very tempted to sell put options pretty much on this day right here, on the day after those earnings announcements came out, I decided not to because I wanted to wait for Facebook to hit, at least the way I see it, a very significant support level or trend line. So now if we change the time frame on this chart, let's go to the max weekly chart, and then we'll zoom in this area right there. So take note of this trend line I drew in white right there. This goes back all the way to 2018. And as you can see, there were 2 times in the past where this trend line held as a very significant support level. It basically formed the base of a huge bull run for Facebook in both cases. And then finally, after this ridiculous bull run for the past 2 years or so, Facebook has now once again come all the way back down and just barely touched that trend line once again. So I'll go ahead and zoom in a bit more. And there you go. You can see it right there. Facebook opened this morning literally right on this trend line, and so far it has backed off significantly from it. And so I've had that trend line in place for probably about a week now, and I've just been waiting to see if Facebook would ever get down and touch that point. And like I said this morning, it did. And that's why, coming now to the trade tab here on the market open, that's why I sold a put option here at the 185 strike. So the base of that trend line is actually at 190, and Facebook opened this morning at around 191. So just to give myself a bit more cushion, that's why I backed off a little bit and sold the 185 strike. And at the time I did so, I sold this option for a credit of just shy of 600 bucks. So now with Facebook recovering a bit, and actually the stock is up on the day now, the price of this put option has dropped pretty significantly so far. And therefore, at least for the time being, this new trade here is looking pretty good. Okay, I'm actually back here again, still on Thursday, February 24th, kind of towards the end of the day. And I do want to give you a few more quick updates. So number one here with Facebook, as you saw earlier, I did place a new trade on this stock, where in particular I sold a put option right as it was touching and bouncing off of this major trend line here. And again, this one goes back for multiple years actually. And so fortunately here, it looks like this trade was spot on. Facebook has continued to rally up even more today. Now it's actually up by about $6 or around 3%. And my GTC closing order actually just got executed. So if we now come back to the monitor tab real quick, just to take a look at the exact pricing of my opening order and closing order there. So right there is my opening order from a bit earlier this morning, sold one contract of the 185 strike put option and did so for 590 bucks in credit. And then like I explained, my closing order just got triggered. So right there I bought back to close the same put option for a debit of only 290. So now if we bring up the calculator real quick, so an opening credit of 590 bucks minus a closing debit of 290 bucks. That equals a $300 profit. Very nice. So definitely very happy with that trade there. And then also, now let's come back to the charts and take a look at SPY. The entire market as a whole actually is up now pretty significantly. So we'll go ahead and zoom in here a bit. So right now we are seeing a massive reversal from the huge down opening that we saw earlier this morning. And in fact, both for SPY here and the QQQ, they have both managed to push beyond this former resistance level. So the first time they got up to this price point, they were both repelled off it for a brief moment. And that's why I thought that this would definitely hold as a significant resistance point. But I guess the bulls have definitely woken up today, and they have definitely pushed this market up a lot further than I would have thought possible today. Now, with that being said, do I think at this point all the selling is over and we're just going to continue recovering, perhaps back to all-time highs? No. I'm definitely still very bearish on the market, and that's why also after taking off my Facebook position, I put on a new bearish position as well. Right? Because even though I've drawn in this horizontal line right around 420 bucks per share, technical analysis is by no means a perfect science. So you could also definitely argue that this resistance point could be somewhere around perhaps here actually, kind of at the base of all these other candles during a lot of that volatility that we saw a couple weeks ago. So from my perspective, I would say anywhere kind of around this price range between 420 bucks per share and 430, somewhere in there, we could see a big reversal, right? There definitely is a lot of overhead supply here. And even with this huge recovery today so far, the market definitely has a lot more to go to actually get to a point where a full-on recovery may actually be quite feasible. So anyways, with that in mind, that's why I basically kind of turned things around and took off a bullish position in Facebook and then put on a new bearish position in Alibaba. So for this trade, let's come over to BABA. In case you don't know, Alibaba is a Chinese company. They're basically like the Amazon of China. And then we'll go ahead and zoom in here. And I do apologize for all the stuff that's on my screen. And in fact, let me go ahead and get rid of some of it right now. There we go. That's a lot better. So as you can see here, for the past few months, Alibaba has been in a pretty nice range. And in particular, this price point right there, which as you can see, I've already gone ahead and drawn in a white support level. So this price right around 110 bucks per share has definitely acted as a very significant support level during this entire time. As you can see right there, and again right here, and perhaps for a brief moment on this day right there. But then, with the entire market collapsing this morning, along with a pretty poor earnings announcement for Alibaba, this stock has definitely broken down below this former support level. And so as you can see, this stock opened this morning right around 100 bucks per share, and then it tried to push all the way back up, and now it's just hovering below this now resistance level. And so that's why a few minutes ago, coming over to the trade tab now, I stepped in and sold the 113 strike call option. Just a simple naked call option, and I did so for 440 bucks in premium. So take note that the resistance level is right around 110 bucks per share. So again, to give myself a bit of cushion in case I'm wrong, that's why I went a bit higher and sold the 113 strike. And then of course, if I'm just super wrong on this trade and BABA just blows through 113, then once that happens, I'll buy 100 shares of the stock and convert this naked call option into a covered call option. So that's the update for today, and I will see you in the next one. All right, welcome back. I hope you enjoyed those few clips there. And so now lastly in this video, just a few more updates to give you. Number one, let's take a look at AMD really quick here on the charts, and I'll zoom in a little bit. So with the market being up again pretty huge today as well, AMD is no exception to that. So this stock right now is up by a little over $4, and therefore, not too long ago, if we come back to the monitor tab, I was able to take off this position for a full profit. So this was my naked put trade where I sold the 105 strike put option and did so for a starting credit of 440 bucks. And as you can see right there, I bought it back for a debit of only 220. So that makes for a very nice profit of 220 bucks. Awesome. And then also let's come back to the charts one more time and take a look at SPY. So just want to provide an update here as we head into the weekend. So like I mentioned, the market is up again pretty huge today as well. And we have most definitely broken through this former resistance point and flipped it back into support. And now the market is heading back towards this next resistance level right there at around 440 bucks per share on SPY there. So definitely a bit unfortunate for a bear like myself to see this. I was really hoping for a reversal right around this point and to see the market turn around and head back down to a lower level. But it definitely seems so far I'll have to wait a bit longer for that. My best guess as to what's going to happen next is we might continue to push even a bit higher after this point and eventually make contact with this resistance level. And this here will be another very pivotal moment for the market. If it can get over this point as well, then we might see an even further rally, a further recovery all the way up to about this point, around $460 per share or so. But of course, with that said, what I'm hoping to see is a reversal now at this point. So by no means are we out of the woods yet with this market. We're still very much in a precarious and bearish position overall, but it does seem like the short-term selling pressure has subsided for the time being. Right now, the bulls have definitely regained control of the market, but we'll see come next week how much longer they're able to continue to sustain this rally. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.